Hey, it's your girl Tila of TilaHolcomb.com, and today I'm sharing with you how I made $3,002.31 trading the stock market. For my first trade, I did what's called a covered call on NEM stock. Now, a covered call is when you are selling someone the right to buy your stock at a lower price. Yes, you can actually do that. So if you own stock that you think is going to go up in value, you can sell someone the option to buy it from you at a later date. So it's kind of like they're putting it on layaway. They're asking you to hold on to it for them. And if it has increased in value to a certain point, they can buy it from you at that agreed upon amount. Let's jump into the numbers and how this trade worked out. All right, so first I bought the stock at 500 shares, at $38.50. Then I sold it at $39. Minus the commission of $295, I netted $247.05 on the stock itself. When I bought the stock, I allowed the stock to go up in value some. After it went up in value, that is when I decided to sell the $39 calls against the stock. So I sold 5 of those because I have 500 shares. You have to sell the same number of shares that you kind of have. So each one contract covers 100 shares of stock. So because I have 500, I had to sell 5 contracts, right? So I sold 5 of the contracts to cover my 500 shares. By selling that, I made $1.20 per share to sell the call option, or just to agree to sell my options at $39 come the third Friday of April. That was a total of $600 coming in, minus commissions of $10.57. I made a total of $589.43 by selling the option. So that's a total of $836.48 for this trade. So let's take a look at the actual charts for this trade. All right, so NEM, I saw that it was getting ready to, or that it was heading into an uptrend here. And I was also able to draw a strong trend line here, just kind of signifying or showing that it is headed or continuing along an uptrend. So as long as the stock stayed along this trend line, this pink line here that I drew, that tells me that the stock is still kind of trending upward. No matter what these candles or the price did in between, you can see it went up, it went down, went up, but overall it still stayed along this upward trajectory, and I can tell that by using this trend line that I have drawn. And so once I identified, okay, this stock is headed into an uptrend, it is getting ready to head up even more, I waited for what I call an entry point on my daily chart. Once I got the entry point on my daily chart here, signifying the stock is moving up even more, that's where I bought the 500 shares at $38.50. That was on March 21st. Then I waited until April 2nd to sell the call options against the stock, the 39 strike price again, at $1.20 each. Then come the third Friday of the month here, as you can see, this stock was about 41.70 here. So it was well over $39, which means I had to sell the stock at $39. It's fine because that's what I want it to happen. I want it to sell at $39 and I want it to get paid that $1.20. That ended up being a total of $836.48 for that total trade. That was buying and selling of the stock and selling of the call option. My next trade is Ulta. I bought call options against Ulta stock, 2 contracts at $14.50. Then I sold those 2 contracts at $17.50. Minus commissions of $17.07, I had a total of $582.93 on this trade. So let's click over to the chart and take a look at how this one played out. Again, this is one I saw that was headed into an uptrend. Once I saw that signal heading into an uptrend, this is actually one that was alerted on my Cherry Picks membership. So members of my Cherry Pick service, where I give them stock picks every week, they were actually alerted of this stock as well. So on April 13th, I alerted that this stock was going to go up. So I bought the stock on April 16th here, and I sold it on April 17th because it moved so quickly and reached my sell price so quickly that I was in and out the next day. So from a daily perspective, it was, I bought here on this candle and I sold here on this candle. But from a weekly perspective, it was I bought here and I, pretty much sold during the same week. Next trade was in ANET. On ANET, I bought puts, 4 put options at $21 and I sold them at $25. On this trade, I bought more of these, but since I still had them come the end of April, those are going to account towards my May profit report. 4 of the contracts actually ended up selling at the $25 minus commissions, brought me to a total of $1,582.90 on this trade. So let's take a look at the chart on this one. All right, so for ANET, I saw that it was heading into a downtrend here on my daily chart. So then I hopped over to my 233 chart to kind of see, to wait for a kind of a reversal first until I could get my my entry point. Once I saw my entry point here that shows that the stock was going to head down even further, that's when I bought those put options. Again, I bought 7, only 4 of them sold. So 4 at $21, my exit point was $25, and I hit that about 3 days later, coming to a total of $1,582.90 for this trade. These 3 trades came to a total of $3,002.31 for the month. Just from, I said 3 trades, it's showing 4 down here, but it's actually, I say 3 because I count the covered calls, the 2 as 1 trade together, right? Because it's 1 trading technique. So that is how I made $3,002.91 trading the stock market for the month of April. If you are interested in figuring out how you can get cherry picks or stocks picked specifically by me every week that you might want to pay attention to because they're getting ready to move, you want to hit the link here in the description for my cherry pick service and check that out, because right now, that service has a 77, we're bouncing between 77 and 78% accuracy rate since the beginning of the year. So you're missing out if you're not on that list. Click the link. If you enjoyed this video, please give it a thumbs up, share it with a friend, and don't forget to subscribe. I'll see you next month.